You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's time to wrap up our broadcast week with the funkiest show on the docket. Yes, it's time for TWIFO This Week in Futures Options. Oh, what a week it was. We got a lot to get to, so let's get to it. My name is Mark Longo from theoptionsinsider.com, as well as, of course, on the ever-interesting, ever-exciting Options Insider Radio Network. A lot of fun stuff on that network this week, as you might imagine. So check it out if you haven't. Easiest place to do that, of course. Just subscribe to our network feed in iTunes or go to our site, get it there, wherever you get your favorite podcast shows, including via our app. Hit up the network. It's all there. You'll never miss a beat. The interviews, the option block, vol views, this show, all the fun stuff we do throughout the week. Extra nuggets that get in there. You'll have it all there. And, of course, if you want to join us live every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern, via Mixlr, MIXLR. Grab that link, set it, forget it. You're good to go for this show and all of our shows. So a fun little extra bonus for you out there, especially this week. I know a lot of you want to talk some index vol. So we're going to do just that. And joining me to help me do just that, my cohort, my partner in crime, the futures options yin to my yang, Mr. Nick Howard, the founder of Bantix Technologies and creator of a little platform we like to use around here called QuickStrike. Mr. Nick, Welcome back to Twifo, sir.
Hey, I'm doing a sound check. How do I sound? Okay.
You sound good. You sound cavernous and just voluminous. Excellent sound, sir. Like you're in a concert hall.
My Barry White. I got my Barry White voice going on today. All right, because I have a different headset today, but I'm ready to go.
Well, since you're so ready, I don't know. What do you think? I think there might have been a little action in the indexes. So maybe, I don't know. What do you think? Maybe we should start there. What do you think? Or should we just go to like fluid milk and spend the rest of the show on fluid milk?
Milk indexes, either one worked for everybody, I think, today.
All right, I just flipped the coin while you were talking, and it came up as indices. So I guess we're going that route. The milk listeners got to wait another week. Nick, I'm sorry. Milk bumped off the top of the list. Yes, of course, we're going to kick things off, talking all things index, and we got to start with the mothership, the S&P. I know a lot of you guys like to sling the eMini, so we're going to get into that out there, the eMini S&P. By the way, you guys, as always, can play the home version of Twifo, not just listening, but you can also do it. You can generate the reports yourself, cmegroup.com/Twifo, TWIFO. You get all the cool stuff that Nick and I are talking about. And actually, during the show, if you listen live, you get a little bit extra, which is cool that usually you got to pay for. So get it this week, get it during the show while it's still active before Nick turns it off and says, no more for you. But you get all the live updates. You can click into the links, all the cool stuff Nick and I are doing here during the show. And if you're listening after the fact, of course, make sure you just adjust the settings of your report so you could back to the date of Friday so you can see what Nick and I are talking about here. And oh, what a week it has been. Net on the week. I'm just looking at the numbers here. By the way, you can find this yourselves, listeners, if you go into that report, cmegroup.com/Twifo, click on the indices, click on the eMini S&P 500. That's where you'll find this. And it's just, how much red there is. Unless you're talking vol, then it's a different story. But yeah, so much red just across the board. Net on the week, the indices are off now about 6.5%. So yeah, it's been all over topsy-turvy. Of course, you guys know by now we came into the week just spooked, I guess, by the fact that Tom Brady finally lost the Super Bowl. A lot of things spooked the market this week, and we had a nice little sell-off there, and of course, exacerbated in the after hours by some crazy unwinding in the volatility space that caused even more panic and more furor and more confusion on behalf. I never knew so many people were interested in inverse volatility trading until Tuesday when everyone started hitting us up about this. So yeah, it's been a lot of explaining, a lot of craziness going on. But still, the E-minis, as you might imagine this week, listeners, just trading it up. Just buckle in for this one. I'm going to show you how much the OI increased this week. Usually on a good week, let's say 5% of some of these products, maybe 7, maybe 9% if we're really talking just crazy town week. The E-mini open interest increased 37.5% this week, listeners. So yeah, just let that one sink in for a little bit there. Just how much volume was going on over there on the S&P E-minis this week. It's a popular product, clearly, and you guys were trading it up this week. In terms of what was dominating the tape, man, that's what's funny about E-minis. Some of our products, it's all front month. This one, actually, when you get out to the weeklies is where a lot of the action is in the indices. We know the index traders love their weeklies. In fact, the biggest chunk this week looks like it was week 3. The Feb contract with a little bit over 25%. That shows you how spread out the volume is in the S&P this week. Week 3, 25%, followed hot on its heels by, what do we got here? We got March, actually, with about 22%. So kind of a Feb, and then actually there's a huge strip of weeklies out here, as we know, in the S&P as well. So there's just a ton of weeklies, and then the front month kind of doing this. So those two kind of tied, close to 25% each, including or seeing what the number one contract here, though. There's so much paper, but if we look into that week 3 contract. Take a guess, listeners. If you had to guess, puts or calls are leading the charge this week. You probably would lean puts, and you definitely are correct, at least when it comes to our number one strike here with a bullet. It's those week 3 Feb 2,400 puts. I said it many times. You guys love your even numbers, your round levels, and playing out again here, even in the indexes this week. 2,400 puts doing about 118,000 contracts, 30,000 on Tuesday, about almost 50,000 on Monday. So almost half of that paper going up on Monday right there. Just crazy paper. Today, a little bit quieter, only 11,700 going up this week. Followed hot on its heels, number 2, by the 2,500 puts. Go figure. Even number puts just dominate the charts this week. Almost 100, about 30 contracts short of 100,000 of these bad boys going up. Again, about half of that going up on Monday, about 47,000 going up on Monday. By the way, both of these biased towards the opening, about 10,000 opening on the 2,400 puts, about close to 10,000 opening on the 2,500 puts as well. So opening downside put paper on even numbered put strikes in the S&P. Who'd have guessed it? Who'd have thunk it? But that's exactly what we saw going up. And, of course, everyone would have thunk that because that's probably everyone's first guess out here. And then, of course, a little bit less optimistic, a little more pessimistic. We got the 2,200 puts bringing up the third spot with 87,000 of those going up. Again, Monday, dominating the charts, about 40,000 of those, about 15,000 total opening on the week. So a little bit more opening on the extreme downside, or shall we say farther downside. Maybe extreme is not the right word there for those, but still a little bit farther on the money. I bet you a week ago you weren't thinking about 2,200 puts. This week you are. And, of course, it wasn't all week 3. Nope, it was actually a lot of action in out here in the front week contract as well, which is going out today. And, of course, it was hot on the heels of the last one. We were talking about 2,400 puts. We were talking about 2,500 puts. We were talking about 2,200 puts. Guess which strike is missing in that strip? The 2,300s. That's what was trading in the front week contract here. The 2,300 puts going out today, lighting it up to the tune of 85,000 contracts, about 17, almost 18,000 coming on Monday, 55,000 coming on Tuesday. So a little bit of a different strip here. The lion's share actually coming on Tuesday as opposed to Monday, and then the rest kind of spread throughout the week. Kind of quiet today, actually, only about 1,200 going up today. And of that, a ton opening on the 2,300s, about 38, nearly 40,000. So almost half of this paper was opening out here. So a lot of opening positioning this week on the 2,300 puts. Of course, that's all going the way of the dodo in a few minutes. So can't really rely on that for hedges for next week if that's what they were doing. But still, interesting stuff. Of course, a lot of that opening on Tuesday. So they had a whole week worth of hedging to go on here. Let's scan a little bit. By the way, of course, you know the story on the vol by now. I'll let Nick get into a little bit more of the skew and vol in a little bit. But vol just, I think the technical term is crazy town out here. S&P vol in the 40 handle now out there for a lot of these products, all these weeks up about pretty much doubling over the better part of the past week or close to it out here. Just ridiculous moves from a vol perspective, pretty much historic by just about any measure of S&P volatility you want to measure in terms of just net movement of the breadth of the move, talking like a 30 handle swing in vol intra-week here, just about pretty much any way you measure it. This is a historic week for the indexes from a volume and from a volatility perspective. Let's dig out here a little bit, Nick, before we get into the skew and see if there's any really funky esoteric strikes that are lighting it up here on my screen here. Wasn't all bears. There were the 2910 calls lighting it up, about 7,000 of these. And what is this? This is SEP 2018 contract, actually. So not that far out. Someone saying, maybe a little bit of love here. But, looks like a lot of that was closing, actually, on the week. So maybe someone perhaps giving up the ghost 7,000 times this week on the 2910 call saying, you know what, that's a bridge too far. I may want to take these bad boys off. Well, there's still a bid left to be found in these. Other than these, got 2220 puts. I'm not seeing too much in the terms of, super exotic strikes out here, Mr. Nick. Maybe something else here that caught your eye. I'll keep digging a little bit while Mr. Nick, why don't you regale us on, obviously, before we even get into the action, maybe just your general thoughts on what a historic week for the markets this was, and then B, what caught your eye from an index volatility and skew perspective?
Well, again, I'm probably the least involved in the market of all the people that you have on hosting the shows with you, but just from the outsider's perspective and from an investor's perspective, I mean, it just feels like this was a long time coming. So it's not that I'm all that surprised. I guess the bigger surprise was after the recovery, seeing it get hammered again yesterday was probably more interesting than the initial break, right? Because the initial break, I just thought that was, I mean, personally, I thought it was overdone a while ago, and it got kind of back to the level where I thought it was overdone even at that point, 2,500, and now we broke further, and now we're back right around that level a little bit better. So, I like when the tree gets shaken like that, and I especially love seeing the reverse VIX people kind of get hammered in that whole situation. It got too complacent, in my opinion. There was just too many people thinking nothing was going to happen, and we've been talking about this for weeks, and nothing did happen for a long time. But those low volatility, selling premium, those strategies work, like we always say, till they don't work. And it's it's funny. It's easy to sit here and second guess everything. I'm definitely not doing that, but I thought it was overdone a while ago, so I'm not surprised. I don't know how much more there's left. I mean, some of those puts that you mentioned that were trading the 2,300s to 2,200s, we really didn't get close to that from a print standpoint. At least I don't think so. And so I think that it looks like the market has kind of tapered and stabilized a little bit here. Now, as far as the volatility goes, interestingly enough, of course, you're going to expect everything under 7 days to have just massive volatility upswing. So you mentioned in the 40 handle out here, 25, 26 vol higher. And I tweeted out a chart that of the March contract, which basically had us, hovering around high single digits, around the 10 mark for a long time. And then we see this big jump in March. Now we're all the way up to we had a 14-point jump this week as well. So probably much needed correction, and in all likelihood, it's not the end of the world. Somebody will come back in. There'll be some other news that'll turn it around the other way, or if we keep going, then it'll shake the tree some more. And I don't necessarily feel bad about that either. So it's always good, and plus it puts everybody on their toes again, because all the short puts that were out there, those guys are now out of the market, and maybe I can't see a lot of those 2,300 puts and 2,200 puts and 2,100 puts. I can't see those being guys initiating shorts again. I don't know how you feel about that, but it's got to be some coverage if the expectation is to continue going down further.
Yeah,
so
I think those guys got shaken out quite a bit this week, whether it was the inverse vol products or if it was just the put sellers or all of the above, call sellers and VIX. I think they all got unfortunately, a very rude awakening this week, Mr. Nick.
Yeah, and again, I always like that. I always like when complacency sort of gets a kick in the rear end. So I think that's what this market needed, and you're probably seeing it across the board with the change in volatility. I have some interesting perspective on the crude oil volatility changes as well when we do get there. As far as if we go out further on the term, it's hard with the S&Ps, right? Because everything trades pretty well within this 14-day days to expiration. But when you go out and look, the 20 to 21 day, the regular March contract, all that kind of stuff, the shape of the vol curve did not really change that much, believe it or not. So the quick skew is still measuring basically like it was at the end of the week. So we had end of the week last week. So we got a little bit of a break last week, so there was a little bit of shift in the vol, and the curve really didn't. Vol just got pumped up, but the shape of the curve didn't really change all that much. So that's a little bit surprising, just from coming in and looking at it over the last day or two, trying to see if we're going to have anything interesting there from a volatility standpoint. And so that's something to keep an eye on. And I think if we don't get a shift with that kind of break, then that probably means that as much as things got shaken up, maybe people aren't as crazed about continued movement on the downside as we think. It's just that vol was low. You want to own options when the market's moving. So it really wasn't a change in perspective of direction or the shape of the vol curve, but more, I better get in this market because we're actually going to have I'm going to buy everything, basically, is what it comes down to. When vol's low and the market's moving, you'll buy any strike because the vol's going to go up, right? So that's really what I'm seeing from this side.
Yeah, I think it's safe to say, Nick, we always talk about the rent. I think it's safe to say if you had some long premium in your back pocket, it probably paid the rent this week. What do you think?
Oh my gosh, yeah, that's the thing, right? You really can buy anything at this point, and the shift in the curve basically showed that, and that's why I'm glad we're going to talk about what the products we're going to look at today, because I just saw things that just sort of kind of reinforce how you expect the markets to work when you see this kind of movement. So yeah, I think anything you owned probably did very well, but I would imagine that that there was some cheap puts in the past few weeks. Remember when we did see that the skew kind of squeezed a little bit tighter several weeks ago? I bet you there were some cheap puts that appreciated even more than just the shift in the vol curve itself.
Speaking of shifts to the vol curve, we do have a listener question. I could cheat and bump it up now if you like, from Jill. She wants to know what happened to S&P skew after this week's sell-off. Or do you want to table it for the questions later? Your call.
Well, I mean, I think I just mentioned it, that there's really no change in the skew, to be honest. I mean, when I look at and here's let's clarify that. There's really no change in the quick skew. Okay, the percent rich and cheap to the at the money didn't change that much. The actual the calls minus the puts, that number got more negative, but the relationship between the calls, the at the money, and the puts basically stayed the same. So that's interesting, and I think we're going to have to investigate and sort of give an example of how that is the case. So yes, we got puts more expensive. The skew got more negative, but the quick skew, the relationship between the puts and the calls and the at the money, not really any change there.
Yeah, it's been fascinating to watch this, and we said this before with indices. The shape's going to stay roughly the same. The slope may evolve a little bit. Puts may get a little bit more expensive or cheaper. Calls, same thing. And we see some of that when you move so dramatically up the chart, up the skew curve. You're going to see a little bit of a swing, in that around that fulcrum of the at the money. But other than that, yeah, you're not going to see a market. It's not all of a sudden. It's not like calls are just bid over puts 10-1 or anything crazy like that, which you might see in some individual indices or in some of the commodity products out there, which see all sorts of funky skews. Look at gold and others, the metals. Their skew can almost change by the week sometimes, and even crude we've seen some of that. So indices not so much. They pretty much live and die by that investment skew. If things get out of whack, if the calls get bid over the puts, and something really crazy is happening. So maybe you want to stay away or dive in, depending on your viewpoint there. But we didn't see anything that extreme this week. What was the name? Jill. Just Jill. So Jill didn't see anything that extreme. Got some more questions about skew. I think we'll get to those in a little bit. I don't know, Nick, anything else you want to hit on indices? We kind of have hit on a lot of other shows. Any other indices catching your eye, or do you want to dive right into Crude? Crude had a big week too.
Well, I think the last thing on the indices is just like we mentioned as well throughout the history of the show, just the amount of volume in the short-dated options here. So I think once people are aware that the short-dated options are available, I mean, just looking at the like you mentioned, the 2,300 puts in the expiry contract today traded 83,000 this week, 450,000 change in open interest this week, right? So just crazy amounts in that contract with a total volume of 1.7 million for the week. So there are weeklies in other contracts. When there are moves that are commensurate with the type of move you had today, even though this was, like you said, historic and big, there are big moves. There were big moves in crude, right? There were big moves in a few other places. You can participate with the weekly options. So you have to keep your eyes open and just look closely at what's available to trade. Because that's where you get your bang for your buck, right? That's where that's your high gamma options, where if there is a move, you're gonna have some change in your premium and you get some opportunities.
Speaking of those opportunities, let's get to one of those now, because one of our stalwarts was also moving quite a bit this week. Of course, I'm talking about all things crude here. I think a lot of people were focused on the indices and the volatility of the indices this week, but it seems like the sell-off just really kind of spread across a lot of sectors, including crude. Crude feeling the heat as well, taking a nice nice dip here this week. Didn't help that later on in the week we got those U.S. rig count numbers showing the number of U.S. rigs rose by 26 through February 9th. So that's, of course, today. So a total of 791. That's the highest total since April of 2015. So for all of you out there, and we talked about this before, it's been such a dance between crude supply and domestically and production overseas and OPEC. Add to that, of course, we're seeing some rumbles coming out of Russia. I think it was a Russian energy oligarch coming out and saying, maybe they want to not play ball with these OPEC cuts too much anymore starting next quarter. They think supply and demand have kind of maybe that oversupply issue has been rectified. He's saying he wants to start cranking out some more crude again. So all of that kind of weighing on crude this week on top of just the general sell-off spirit across the board. So we saw WTI drop in below 59. First time, of course, of this year. Ended the week about 59, right around 59 handle or so, off nearly 10%, about 9.5% from this time last week. Of course, you saw the dollar also kind of piling in on that as well. So yeah, this is the worst weekly sell-off, worst weekly drop in WTI in about 2 years. You got to go back to about 2016 to really see a similar just shellacking, I believe is a technical term, out there in crude. So just big time. Of course, all of you out there, we've been saying this for a while. The crude vol has been paying the rent. It certainly paid the rent this week. If you had some long premium in your back pocket, you were adept on your scalping and your exiting, then hey, it paid off well, because crude vol, everyone's been asking, when is it going to come back? It was back in spades this week, pretty much up across the board, anywhere you're looking. Sizable amounts. We're seeing, 5, 6, 7 points or more across the board here. Just extreme injection of vol, which is, again, commensurate with what we've been seeing with the skew out there for a long time. There was a slight bid to the calls, but the steep, longer-term, really deep bid in terms of premium has always been to the puts for some time. So we knew it would take really a protracted sell-off in WTI to really jack up the vol to the levels that people, quite frankly, out there have been wanting for some time. And we saw that happening this week, again, with up about 7 points, pretty much however you cut it. OIV, which tracks, of course, the implied of WTI, over 30 again for the first time. That's probably about 8 handles higher than where it closed. I think it actually been 20, might have been 10 handles higher than this time last week. So pretty much however you cut it, vol is just exploding out here, which, again, people have been writing in. They've been asking us, where's the vol? I'm buying premium and crude. I'm not getting it. Lately you have been, of course, because the moves have been paying for it. But now you got the move and you got the explosion in vol, so it's kind of a double whammy of goodness out there if you were on the right side of this one. And in terms of what was lighting it up, it was an active week, about 5.5%. So that puts that 37.5% increase in OI in the eMini in perspective, because this was a pretty strong week in crude, and OI was up 5.5%. So bear that in mind as we're looking, again, cmegroup.com/Twifo for you guys to play along with the home game. If you do just that, you'll see that number one, if you're saying to yourself, we had a bit of a downside week this week, we settled out right around the 59 handle. Where do you think the number one with a bullet trade was? If you said the March 60 puts, which are now in the money puts, you'd be correct, to the tune of, about 88,000 of those bad boys lighting it up. The lion's share coming on Wednesday, about 25,000, 19,000 on Tuesday and Thursday, so pretty active. Today, about 15,000 as well. Net of that actually closing, not surprising, we blew through that strike on the downside. So if you had it as a hedge, you probably want to take it off. Or maybe there's people just have positioning there, they want to take off. You blow through that strike, not surprising to see the OI. Only slightly, only about 4,000 contracts. So there was a lot of back and forth on that strike, as you can also imagine throughout the week. As we're just vacillating around here on that 60 handle, people are going to be churning and burning on that strike for size, and they clearly did throughout the week. Number two is a little bit less optimistic put. It's the 57 put with about 57,000 contracts out there. The lion's share actually coming today. So I guess once we broke through that 60 handle, people said, look out below, going to that 57 strike. 27,000 going up today, 16,000 yesterday. The rest kind of scattered throughout the week. Total is at 57,000 and change about 7,000 net closing there as well. So net closing on the 57, net closing on a lot of puts this week. Again, we had a protracted sell-off. Not surprising to see some people taking their puts and going home, taking those puts off the table. Then we drop down a little bit again to number 3. We've got the 58 puts. So kind of split in the middle almost there. 60 puts, 57 puts, now 58 puts. Nice little put strip. 39,000 of those lighting it up. Again, today being the lion's share of the activity. About 16,000 going up today. About 9,000 yesterday. The rest scattered throughout the week. Again, slightly closing on the week. So big moves, a lot of downside churning and burning on these strikes. And net kind of closing activity on all this this put strip here. Pretty much across the board. Yeah, it's pretty much going to be all puts. Next in line, you guessed it, the 59 puts where we settled out, number 4, 33,000 of those lighting it up. The lion's share actually coming yesterday, about 10,500 yesterday, 9,000 today, 7,000 on Wednesday, the rest kind of scattered. And again, net slightly closing on the week. So it's kind of our narrative there. A lot of put action. That 60 to 57 strip of puts was all very active. That's our 1 through 4. And all of them churning a lot of action with slightly closing activity net on the week. You got to drop down quite a bit here, before that, we got to jump all the way out here to June. We got the June 2018 60 puts doing about 30,000 coming in at number 5. So we got puts. Calls are kind of an afterthought this week, listeners. 30,000 of these June 60 puts. The lion's share coming on Tuesday, about 12,000 there. So kind of split. Different paper going up this week as well. Wasn't all today and yesterday, which is kind of interesting. A net opening here a bit, about 8,000. So almost a fourth of that is opening on the week. So someone maybe doing a little bit of rolling out here from the front month out here to the June, which wouldn't be the craziest trade I've seen out here. That would probably account for why some of this is so much opening here in the June. Then we go back to the front month for our first call on the list, which is the, what do we got? 65s. The now seemingly ever optimistic 65 calls, about 25, almost 26,000 there. The lion's share coming on Wednesday, about 9,300. Net actually opening on the week, about 3,600 contracts total on this strike. So net open on the 65s. Maybe the bulls aren't dead. Maybe they haven't given up the ghost, or maybe they are and they're just overwriting like crazy. Either way, pretty active out there on the 65s. So very interesting. Not exactly surprising that the puts would dominate the top of the charts here. Let's scroll down a little bit. See, you guys, of course, can play along while you're doing this as well to scroll down, see some of the funkier paper, see if you got any really weird strikes. It's like one of the weirder strikes. So we got the 40 puts going up 1,500 times in October 40 puts. 50 puts lighting it up about 9,000 times, a little bit more sizable. That's in D's. The D's 50 puts doing about 9,000 and change. All of that pretty much coming, or close to all of it, 2/3 of it coming on Thursday, about 6,700 of it on Thursday, about 1,300 openings, not all opening there. A little bit of back and forth on the 50 puts in D's. Other than that, it's kind of been just a whirlwind of activity out here. Mr. Nick, what was catching your eye out here in Crude, as Crude had kind of all these forces arrayed against it this week? It had the broad sell-off, which was dragging everything down. It had the dollar leaning on it. We had these comments coming out of Russia. We had the rig count. It seemed like a 1, 2, 3, 4, 5 punch for Crude this week. What caught your eye out here this week, sir?
Well, I want to go back and mention a little bit about just the skew in the S&P, and then looking at the skew in the WTI here as well. As you look at what happens as this market went down, you could have looked at last week's vol curve and then just followed the curve as the futures went down, and you would be moving up that volatility curve. Okay, so basically you're wearing the belly last week for a Crude, and now you're up along the left side of the vol curve. So what we saw this week is like we didn't see the curve move along with the futures. We just saw the point on the vol curve move up along the left along the vol curve. So that's one reason why volatility goes higher. So we moved down the puts that had an upward slope on that side. So we saw the volatility get higher because we moved into that part of the curve. Then we had a bid in the volatility as well. So about 4% of that 7%, whatever we're looking at in here in April. What was April up here? Looking at April was up like 7 3/4%. About 4% of that was volatility move. about 3% was the change in the at the money from being where it was last week to what the new at the money is. So there was a slide along the curve, and then there was a shift in the vol. So that's something to keep in mind. And the reason there wasn't much, there was where the S&P curve just sort of slid along in its same shape. The vol curve here, we slid up the vol curve, and the shape, the at the money now is at a different spot where it was last week. So what that tells us then is that our calls now are in where the at the money was before. So it's sort of in the belly of the vol curve. So we saw in our quick skew, we saw our calls get much cheaper than they were in comparison to the at the money, right? So when you're looking at volatility movement, you got to see what the shape of the curve looks like, how the at the money moved along that vol curve, right? Because there's a reason it's that shape. It's the expectation that if we go down, that volatility is going to be higher. And then you also got to look if that curve moved along with the futures as well. So you're going to see sometimes a curve move along, and then you won't see too much change in the quick skew numbers. You'll see a curve where the at the money volatility moves along the vol curve, so you're going to see potentially a great deal of change in the quick skew, like we're seeing here in the crude oil. And then you're also going to get the straight parallel shifts, which I want to talk about when we are very interesting in that's what happened in the EuroDollars today. So I don't know if that was a helpful explanation. I can visualize it and see it while I'm saying it, whether I explained it correctly or not. But I think if you take a look and do a comparison of what the vol curve looked like today and what it looked like last week, you're going to see that the money just slid up the curve, and then we had an infusion of volatility. So some volatility is from the change in location at the money, and some is from the people getting back into the market who weren't in the market. So it's that's why you like volatility, because there's so many things that you could talk about and that could happen. So we saw puts get more expensive, the 25 delta puts, as you would expect, because we're sliding up that vol curve. The calls got cheaper because their 25 deltas are now in the belly. So we saw a pretty big change in the quick skew. So calls got quite a bit. They're almost 8% cheap to the money now because of the location on the vol curve, and the puts are about. Let's see. I'm going to concentrate on April. About 7% cheap, and then the puts are about 11% expensive. So there was a pretty good shift, and that shift is because of how we moved along the volatility curve. So that's so I'm excited because, see, that's the kind of stuff that excites me, is looking at that and seeing the relationship between the numbers that are here and why those numbers are represented the way they are. So that's probably the most interesting thing that I'm seeing here. So there was a bit in volatility, but there also is a change in location. So even though the vol was pumped, because at the money volatility gets measured based on where the at the money is, sometimes it can misrepresent the actual movement in volatility for the week. So Mark, you know what I think we're going to have to do? I think we're going to have to, in the volatility section of the TWIFO report, put not only the ATM column, but also put a strike column so people can see how much volatility of that particular strike also changed. So now what that will do is allow them to really get a true representation of how much vol was pumped into the market, as opposed to just this at the money volatility, where of course we're going to expect the at the money change, even if no more bid and volatility came. If we just had a downside move with no pump in vol, the at the money vol would go up, but the volatility of that strike itself would have stayed flat. So that's I'm kind of excited actually talking about that. That's what I see. And what also I see is my disappointment in the weekly options. Less than 2,100 traded. Now, I can make an excuse for them because the March contract is the front contract that's expiring, but still 2,100 for a 1 week. I don't know. Someday I think it's going to happen, but I think it's going to have to change until people see all those. It's because the trading systems don't put all those contracts together, and because each weekly is seen as its own product. That's why this is happening. I know that the exchange is working on something to get those more in front of people, but that week, next week that week 3 contract is going to expire on Friday. That should be the hot contract if we're still seeing movement at this time next week.
Yeah, it's been an ongoing conversation with us that who knows what it's going to take. People will trade the standard, the serial contracts when they get into that weekly time frame. So it's not like they won't trade short duration contracts. They just, for whatever reason, The weeklies. I think your combination mentioned earlier that it's probably something under the hood, behind the scenes, the way maybe the weekly quotes are disseminated on some of the brokers or the platforms or others. They're not quite as obvious or easy to access. Something like that has to be the cause, because people will clearly trade near-term products. It's just not when they're delineated as a weekly for whatever reason that is. And I think your comment on the skew was worthwhile as well, because skew is an interesting beast depending on the product and the move. Usually when they move, they kind of slide up the curve, and the skew should kind of pivot around that at the money, kind of like a fulcrum. But sometimes, like you mentioned, it just moves, just shifts whole hog, but keeps its shape, which is, those are that's the vagaries of skew, which makes it so interesting to watch and so weird at the same time, and sometimes so confounding, because what you expect to happen may not, which is why the quick skew is such a handy tool. You guys, if you're not using it, you probably should be using. Really quickly, Nick, I know you mentioned the EuroDollars having some big moves as well, and they clearly did. I know EuroDollars are your baby, so I wouldn't presume to step on your toes there. You used to be out there in the EuroDollar pits and the CME. Regale us, sir. What caught your eye out here in EuroDollar action this week?
Well, I think the reason I wanted to talk about the euros today, which typically I don't, because it's sort of like we mentioned last week, sometimes it's kind of ho-hum, but the shape of the vol curve in the EuroDollars doesn't change that much. And when we were in the pit, you were always quoting where the at-the-money volatility was. So in this case, there was a pretty big jump in the short-term interest rates, and that really caught my eye, just based on the fact that there wasn't a change. There weren't in the white contracts, which is the first year of contracts in the EuroDollars. There was no change in the at-the-money straddle in terms of the strike. So that's significant in the short-term interest rates, because you had a significant move in volatility higher with no change in the at-the-money, because that curve is whack. That vol curve, especially when you get into short-dated stuff, it's almost like a V. There's the at-the-money, and then there's two strikes around it. So you'll see weird, strange shifts as it changes at the monies, going from a low number to a high number if it's a put, and a low number to a lower number if it's a call. It's a V sometimes. Sometimes it's like just a slash from the top left to the bottom right. But what I wanted to mention today is the fact that there was a significant boost in volatility without a change in the at-the-money. We saw futures prices move 5 tick. When you see 6 tick move in the front month contract for the euros, that's pretty good, because as we move towards expiration, the interest rate is sort of set, and we're inside FOMC, I believe, and maybe we get one more inside of here. But we saw 6 ticks that bumped the vol pretty good. We saw a pretty good shift in the futures in general here this week. But that's why I wanted to make sure we mentioned that, is because now this is a pure volatility movement here. That is at the money changed by this much with a move in the futures contract. So fairly significant there. When you go from, let's see where we started here, just to be so I'm certain. So we went from 98.10 to 98.04 in the front contract. And then when I look at April, we didn't have any change. April, May, June, we didn't have any change in the at-the-money, and we had a pretty, almost a nothing change this week in futures, but we had a big bump in volatility. So that's the third example, and it's pretty cool that this week we have sort of a sliding curve, a curve moving along the at-the-money moving along a volatility curve, and then also a pump in volatility. And this one we have a pure pump in volatility. So that's kind of fun, I think. That was we get the trifecta today, the volatility curve trifecta, and that's kind of why I wanted to make sure we talked about. And of course, 2.5 million options traded in the EuroDollars today. So ho hum.
Yeah, the EuroDollar numbers are almost mind-numbing when you hear them, right? It's like, 2.5 million contracts, just another random Friday in the EuroDollars, and no big deal. But you're right, you got the trifecta going on out there in the realm that is synonymous with excitement, Nick, aka the EuroDollars. Of course, I'm joking, but the area that is typically, at least for a lot of people, seemed to take a little bit of a back seat this week. Everyone was talking about vol and inverse vol and broad index beta and selling off and all that fun stuff. Didn't hear a lot of crypto talk this week. It's the one week of the last 6 months where crypto hasn't dominated the headlines. But that said, crypto also taking a bit of a drubbing, at least in the first part of the week there. A lot of people were talking last year, Nick, about swapping out some of their hedges and some of these less correlated, inverse correlated products like gold and others, swapping that into crypto and how crypto could perform that function in your portfolio. I think we saw this week that that's not really the case. When everything was selling off, guess what else was selling off? Bitcoin was down below around 7,000 at one point. I'll have to pull up the final quote here over there at CME to see where their futures are trading now. But still, just not exactly. Oh, back up to 8,700, up about 400 handles today. So there you go. Bitcoin getting back some of their love they lost. Trading 6,700 earlier this week, trading 8,700 this week. So if you want your vol, it's there. That said, Mr. Nick, the reason I bring up crypto, not just because people ask us questions about it, because I know you, who are notoriously difficult to get out of the Quick Strike HQ and get to go anywhere, even downtown here to the studio, you trudged all the way to NYC for a crypto conference this week, Mr. Nick. So tell us, what secrets did you learn on the crypto front this week, sir?
Well, I tell you, you know how I feel about the conferences. I think a lot of times it's just, you know what, I don't even need the word to describe it. But I had multiple reasons to go out there. I had some business stuff to do. I had some family stuff to do, visiting some kids out in college. And then it all kind of was a confluence of opportunity for me to go into the Yahoo All Market Summit. And I went out pretty skeptical. It was a one-day, basically 10 to 4. And I'm thinking, okay, they got these 15-minute, 20-minute little shots at us. I'm not expecting too much. But much to my surprise, it was actually super informative. The speakers were great. And let's just say there are some super smart people diving headfirst into the rocky Bitcoin waters. I mean, you should never dive into the rocky waters. And I remind people of that quite often. People are all in. And as much as there's a lot of naysayers, I think you got to pay attention. There are some sharp cats that are running places like Chain and Blockchain and CoinList. And the Ripple guy was really super impressive. The BitPesa woman, just really intelligent, really fun to listen to. And then this I call him a kid because I'm an old guy, and this kid couldn't be out of his 20s yet. Maybe he was in his early 30s. He ran lawnmower.io, and they sold that company. That was somebody who they built something where the bank accounts used to let you round up your dollars to the nearest dollar, and you could save money. Well, lawnmower.io rounded your dollar up and bought you Bitcoin. What a smart idea that would have been. What these guys were doing a few years ago, sold that to Coinbase. But great conference, super informative. Just talked about there was another guy from DGC or DG. I'll tweet something out. I forget his name, but he's starting a fund where they're going to invest for you in the top 5 coins. So I just thought it was a really informative, really interesting. Talked to some great people. LedgerX, Juthika, I think is her first name. She is the CEO of that. Talked about their exchange. So my whole point in wanting to even bring it up is there's so many executives in the futures or the derivatives industry that just don't want to believe that this is going to happen. But I really think that you got to pay attention. And the coins may change, and people say, and I think the one myth to bust through all this, Mark, is that so many people say, well, I like the blockchain technology, but I don't get the cryptocurrency. But the problem with that is you need some sort of token to transact on the blockchain. So they go hand in hand. So until people understand that there's a requirement there, it's going to be we're still going to see this sort of battling of blockchain versus Bitcoin when they have to exist together. And the other interesting thing is just keep an eye on Ripple, because Ripple is a little bit different in that they're trying. Their big thing is talking about being able to do cross-border currency swaps. So that's a big deal. It happens very quickly. And I think that's the one to watch from just solving a practical problem standpoint. So really big thumbs up. Yahoo did a great job. And also one of the big bonus, their pens were write really smoothly and well that they gave away. So I get kudos to the pens.
There you go. That's the standard for any conference, right? They give away quality pens. The tchotchke is always the barometer. You know, Ripple, everyone's been talking my ear off about Ripple of late. You got to get in it. It was the cheaper one to get in. It's so good. But, of course, you have to jump through all these crazy hoops. You can't just buy Ripple. You got to buy 15 other cryptos to get your way to Ripple. Maybe I exaggerate, maybe 2. But still, it's just interesting that, of course, always brings to mind my thought when I want to get out of this thing. How easy is it going to be to get out if it's so hard to get in? So beware sometimes the roach motel of some cryptos. That said, you're right. It is an interesting space. It's evolving. And to see new products in the financial realm that are gathering this much just general interest is kind of interesting. Speaking of which, I'm seeing some links going by. Everyone's talking about these inverse vol products, Nick, going back to what we were saying before. It's like Fidelity may actually be banning a lot of their clients from trading these things. Which is kind of an interesting development. It's been a contentious thing. These products are very contentious, whether they should exist or not. Should they be regulated more heavily? Should retail even be allowed to trade them? We were just debating it a lot on our last show. I got a feeling that debate's going to continue in the coming weeks, as certainly is going to be probably congressional hearings on these issues and stuff. But it seems like, Nick, I haven't had a chance to read it yet, but the headline is coming across at Fidelity. Maybe putting the kibosh on that, which is kind of interesting. Speaking of what's interesting, what was lighting it up this week, you guys probably have a guess what was moving, but let's look at the top 5 movers and shakers over here on the CME group platforms. You know, they trade a lot of crazy stuff over here, a lot of esoteric stuff. Sorry, all you fluid milk lovers out there not getting any love on the show today. What were the big gainers this week? Not a lot of green on the screen. A little harder to find this week. If you did look, you found it in soybean meal, up about 4.7%. Then it falls off. Nick's old favorite, the EuroDollar, is up about 2.7%. Iron ore, number 3, about 2%. The yen dollar, easy for me to say, up about 1.5%, and then wheat carrying up the lead, or the rear on the top 5, about 0.5%. To the downside, actually WTI sell-off, taking the lead on the downside there, off about 10%. A little bit more than that. And heating oil hot on its heels, off about almost 10% as well. RBOB, it's all the energy complex pretty much. RBOB off about 9.3%. Nat gas off about 9%. And bringing up the rear here, the Nikkei yen off about 8.5%. So some interesting movers and shakers. S&P eMini didn't even make the top 5, only off a paltry 6.12% on the week. So there you go. All the headlines about the S&P, but percentage-wise, the action was elsewhere. Speaking of getting the action from elsewhere, let's move on to some of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, you know the drill. Time for your questions, time for your comments. We already answered Jill's about S&P skew. A little bit of a movement, not much of a change really out there in S&P skew. Volvic got a comment from maybe Volvic, more of a Vol guy, Volvic, saying, liked all the rates talk. More of that, please. He's obviously referring to last week's show. We had Aga from the CME on. Nick, that's in your wheelhouse as well. So you must be excited. You love talking rates, right?
Yeah, as long as there's, I think today's a perfect example. I mean, it can get kind of, and the thing is, we should probably, rates includes not just the Eurodollars. We got to pay attention. There's always interesting and good stuff going on, primarily in, across all the treasuries, but the 10-year in particular. So yeah, we have to do a little bit better job there, and maybe we could start initiating some education about strike's relationship to the yield and that kind of thing. Talk about the dollar value of basis point, those kind of things. So yeah, I'm glad to do it. It's always fun. Keeps us on our toes.
I think people just want a 5-hour show, Nick, because every week we get people writing in. What about this complex? What about this complex? So they want us to cover every single product on Globex. What do you think? We should do that someday. What do you think? A marathon 24-hour show? What do you think?
Yeah, get some coffee and some cookies, and we'll sit all afternoon. We'll go, from open to close. We'll do a live day show. What do you think?
Full day, 24-hour TWIFO marathon. Take it. Talk some RBOB, talk some fluid milk, talk some live hogs. It's all good stuff. Just slinging it. We're going to go deep. So there you go. Everyone was always writing in. What about my esoteric product of choice? We'll cover it on our massive extravaganza. But yeah, I think we'll work some more rates in now that we have, perhaps a new regime facing us. Rates a little bit more active again. Certainly we'll probably be back on our radar. Look at this week. EuroDollar is coming up over there. More skew questions, Nick. We got El Nino, number 3. He's the third El Nino. I guess 1 and 2 were taken. Are the skews between eMini, SPY, and SPX all correlated? I think you can probably guess the answer to that, to Mr. or Mrs. El Nino. In the old days, the correlation took a little bit longer to line up. You had to actually arb trades between the pit. You had to keep an eye on the big, S&P options over there in the CME. There weren't really, E-minis weren't really a thing as much as they are now, but now, of course, the E-minis as well. You had to get people in the SPX pit on the SIBO. You had to have people out there monitoring all these things. And then, of course, SPY the option didn't really exist then either. So the landscape has changed quite a bit since when I first, walked on the floor of the SIBO. But back then, of course, the correlation existed even then. It was just longer. People were bidding up the skew in 1 month. You'd see that information be related back to the clerks in the other pit, and they would trade and make their markets and adjust accordingly. It would take a little bit longer. Now it's, all these products are electronics, or the lion's share of them anyway. And so that the hedging and the arbing takes place, much, much faster. So yes, you're not going to see something where, let's say SPY puts just get annihilated and the puts in SPX and the E-mini and everything else are all just bit out of control. You're just not going to see that. There are clearly relationships between the very similar products. And so, you're going to see people arbing back and forth all day. If that does happen, it's not going to last very long because they're going to arb it back and forth very quickly. I think long answer to your question is the answer is yes. Mr. Nick, any thoughts here? People got skew on the brain today. Any thoughts about El Nino's question?
Yeah, I think you answered it just how I would probably approach it. It's got to line up, and if it doesn't line up exactly, it's got to be really close. Those were the fun days, right, where you had to be on the phone, and they had those phone pads, right, so you could hold the phone between your ear and your shoulder without it falling apart, and sometimes you could do both shoulders, so you can listen on one and then talking to the other one. So. Yeah, I'm with you on that answer.
Well, we were fancy. We had headsets. We didn't have to hold phones.
Oh, we had the phone. We had the thing on the phone.
Yeah, you CME guys were in the dark ages. We had headsets.
Yeah, we were for sure.
All you cowboys and crazy folks on the CME, we had headsets, baby. We didn't need to hold phones. Let's see what else what else have we got here? This guy wants commodity ETFs. No, I like this handle. McNuggins. McNuggins says. Fun show. Well, thank you, McNuggins, easy for me to say. Goes on to say, maybe bring back the crazy trade of the week, like the gold trade. Thanks. We have that in our back pocket. We used to have it as a regular segment. The problem with that is that just not every week is there something that really qualifies as an outlandish, crazy. Certainly that gold trade was an outlier of outliers. It was extreme by any way you could carve it up. So having something like that every week, it doesn't really materialize. I wish. It'd be great for the show. So we kind of keep that in our back pocket. We had the EuroDollar ones recently that Nick was talking about. That's one of our early candidates for crazy trade of the year here early in 2018. So when they come up, we'll bring it up. And plus, we've had a lot of people want so many different things to be covered on the show every week that we have to fit in as much as we can. So allocating something to always every crazy trade every week instead of maybe covering another product complex or suite in that time. It's kind of why we went that way. But that said, when crazy stuff pops up, trust us, you'll hear it from us. Mr. Nick, what do you think? Should we have a crazy gold trade every week? It'd be kind of hard to live up to that one every week, don't you think?
Yeah, I don't think that we're going to get any extreme or something extreme that happens all the time, but we could have, maybe instead of trade, we could have crazy occurrence of the week. So it could be a market related It could be a block trade that's funky or happened off, was a little off kilter or caused some consternation in particular market, that kind of thing. So we could have that's not very fun word, crazy occurrence of the week, but but we could probably find something.
Now it's time for our crazy occurrence of the week.
Crazy
that doesn't have the same ring to it, sir.
Doesn't, right? I don't know. You have like some librarian picture there, great, with her eyes or his or her eyebrows raised over his or her spectacles. So anyway, maybe another word. Write in with a generic word for crazy something of the week, and we can approach it differently maybe going forward.
Crazy volatility and or skew and or underlying / delta event of the week. How about that?
That works. That works for sure.
There we go. All right. After all that, we'll wrap up with some quick ones here from the live. We got Option God saying, fun show today. Well, thank you, Option God. We try. The markets helped this week. They contributed. And Options Queen saying, thanks for explaining so much. Need someone to talk me off the ledge. Well, I'm sorry to hear that, Options Queen. Hopefully you weren't long a ton of those inverse volatility products in the indices. If you were, our sympathies, madam. But yeah, it's crazy time. Well, good thing if you're in Fidelity now, you can't trade them. So maybe that's a good thing. I don't know. Either way, it's been a crazy ride this week indeed. Unfortunately, that music means we've come to the end of another epic sojourn through the world of options and volatility and everything else good. Talked a lot of indexes and index vol this week, as you probably would expect. Skew didn't change perhaps as much as you might have thought, given all the craziness out here this week. So maybe that's a little nugget. Maybe that goes into your not crazy trade, but your crazy occurrence of the week, Nick. Skew, not perhaps changing as much as you thought. There you go, crazy occurrence of the week. There you go, McNuggins or whoever asked for. Who was that? Yeah, McNuggins asked that. So there you go, McNuggins. Hopefully you're happy with that one. Also talked WTI, also taking it on the chin this week. But guess what? The vol's back, so that should make you happy. Things rocking and rolling, of course. If we don't see the movement sustaining, the vol could probably retreat again as it has many times in the past. But for now, it seems like it's back in spades. So enjoy that, all you premium buyers out there in crude land. Also, Mr. Nick got a little segue into the rates. We got all your other question love. Keep those questions coming. We do like to hear from you guys. And Mr. Nick, speaking of hearing from you, we hear from you every show every week, but in between shows throughout the rest of the week, where can we go and what can we do to learn more about all the fun things going on at Quick Strike?
Well, you can always go to our company website, which is Bantix, BANTIX.com, and you could learn about Quick Strike, Quick Vol, and whatever other new offerings, which will soon, let's just say something like Quick Crypto, that might be coming soon for your viewing pleasure. And then you can go to cmegroup.com/quickstrike, and you'll see all the embedded tools that are available for free on the CME website. And if you are using a platform to trade and you're not using CME Direct, you might want to give it a try, because there is a pretty significantly functional version of Quick Strike embedded right in there for your usability or for your using pleasure as well. So and keep an eye coming out. There'll be some announcements with some good tools getting released over here in the next couple of weeks, maybe by the end of the month. So stay tuned.
We got Stefan just jumping into the chat room. He wants links to the XIV employee. He says, yo, Options Inside. That's us. Yo, you. Yo, yourself. We'll send you those links. Stay in the chat, and we'll put them out there. You can also grab them. We'll put them out there on our social media for all the shows we just did about the inverse vol stuff. We got a lot of it this week, so don't worry. We got you covered. And, of course, check out our friends over there at cmegroup.com/TWIFO. The easiest place to get all the stuff Nick was talking about, kick the tires, and see if you really want to experiment. That head on over to bantix.com to get the hardcore, super duper version. By the way, while you're there, you want to get some of these charts. Nick's always sending out, and his team always sending out cool charts and data and graphs throughout the week. Give him a follow over there on Twitter at QuickStrike, QUIK, no C, QUIK, STRIKE1, Quick Strike 1, no C. Give them a follow. Lots of great data coming out over there. We retweet a lot of it. Make sure you guys see it over there as well. On behalf of Mr. Nick and our friends at CME, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, all the other fun stuff you guys do throughout the week. Now take a deep breath, Market's almost closed. Things are almost over for this week. You can take a deep breath, relax. If you snowed in, I hear you. We're snowed in here too. And then you get a nice, long, relaxing weekend with some hot cocoa and come back at it again on Monday for more Options Insider Radio.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QuickStrike1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.